All right, guys, we got another Sunday scan coming at you. This time for the 13th of June. It is my birthday week. My birthday is on Flag Day, June 14th. So hopefully we have another solid week. The market was in the dumpster the past couple weeks, but that didn't stop small cap runners. We actually had one of the craziest small cap running markets we've had in a very long time. AERC obviously started that. Going from, I don't even know, $2-3 to, $15 almost. And because of that, it started to boost everything else that was running. So midday, you had a lot of intraday, not necessarily traps, but almost like squeeze outs where normally something would be steadily fading. But as soon as it upticks, everybody just got so afraid that they just go and they spray the offers to go ahead and get out of the position that they're in. Just so they don't, get into trouble. And you saw that on JAN, as well as a few other ones. But, I actually had some questions as to why didn't I put it on scan each night? Why wasn't I interested in it? And it just goes back to what I talk about, avoiding what you suck at. I'm not good I'm okay at them, but it's the ones that usually end up giving me some sort of trouble. Low floaters where they've got a ton of volume where I don't mind sizing in. And most of the time they work out, but it's that one outlier trade that you don't have proper risk management that takes back all those gains. Just like, after hours, the same reason I prefer just to walk away from my desk at 4 p.m. Because yes, most times I probably will have a solid trade after hours, but there's going to be that one that's going to take them all back. So to me, it's just not worth it to trade after hours. It's just not worth it to step in front of a name like AERC. So I traded it twice the first day. The first trade was good. The second trade, I gave it a little bit of breathing room a couple times in the nines. It was like around 920, I think. And I had said if it holds 9 a couple more times, then I'm going to be exiting. And the reason for that is because we had the stuff move, comes back to about 880 or so. Stuff move comes back, they soak it. What we always talk about, what happens after the stuff move is all that matters. So if a stuff move happens and it's going to go down, it should be staying heavy. It should have failed follow through momentum. When it doesn't, that's when you need to be aware and just say, the hell with it. And for me, it's an avoid. It's an avoid the next couple days because everybody thinks it's an obvious short. Everybody thinks it's going to be an easy trade. And you know what? Even if I trade 10% of my position, it still requires 95% of my attention because it's the ones that get away. They're going to throw you off your game. And for me, I just choose to ignore them. And that's why I didn't have it on radar every single day. That's why I wasn't even, having it up because we had so many other good opportunities, COGT, DOCU, PBTS, RDBX, right? And would you have seen all those if you were trying to figure out AERC? Would you have invested a lot of time in AERC looking for that unwind only to get, swiped back up? So for me, I could have gone long. Yeah, there's a lot of things that you could look at in hindsight. But for me, it's just an avoid. And it's easier. It's easy to avoid the trade. So that's why I didn't have it on scan last week. And that's why, you didn't even really see me mention it. And also on those, typically if I, sometimes the risk management starts with the borrow, right? So if you know that you typically are not good at a particular setup, particular float, 1 or 2 million float, if you're taking a ton of size, then that's on you. You can control it right there. All right, I'm only going to borrow X amount of shares. And that will keep you a little bit safer than having just this ability to short whatever you want, right? So your risk management starts with that borrow. And I honestly was happy that I borrowed AGRI. I woke up, it was Tuesday morning, so I had my morning workout with Zach. And so I was up at 5 and I was borrowing AGRI. I don't know why. I think I just looked at the percentage gainers or something. It was up. I don't know. But I borrowed a bunch of that, thinking in my head that it was AERC. So then when I went back, I was only able to get a couple thousand shares of AERC and they were out. So, I always say be honest with yourself. I think personally that probably also helped me because there's no telling. Sometimes those things just kind of draw you in. And would I have had a massive loss? Possibly, but that's where your max loss kind of kicks in, right? If you end up getting stubborn. But fortunately for me, I didn't have to worry about that. And like I said, I just didn't have enough borrows to really get in trouble. And then for the rest of the week, I just took it off radar. Save yourself the money. It was expensive anyway. And the most obvious short is never obvious, right? The most obvious name to fade. Everybody is looking to fade it. It's junk. It should fade. It should do this. It should do that. Well, if it's staying up, then it's going to go up even faster. So be aware of that when everybody's kind of on the same side. First and foremost, on every week, as you guys know, I like to pick winners. People that comment, you leave a key takeaway. Leave the timestamp in the comment section of, maybe something that I said, something that you learned, something that you saw that stood out, that was more of like a aha moment for you. And as you guys know, we like to make the micro content, put it out there, and so far it's been really, really, really good. Icon Meals on trades 11. You've got Icon Meals as long as you are within the U.S. As you guys know, Todd is a good friend of mine, and I order Icon Meals every single day. Get a box each week for food, and that's what keeps me fueled and keeps me energized. And so he had reached out one time and said, "Why don't you give it away on your video?" So this is me giving it away once per month, and on trades 11, you've got it for this week. T-shirts, MOMOM Dreambox, AS Interstellar, and Dagmara Kozlicka. I absolutely demolished those names, but you guys can look through under the description, click the link to the blog, and I've spelled everything out for the winners for the t-shirts this week. So do that, webmaster at investorsunderground.com. We'll send you out your t-shirts. We'll send you out the Icon Meals, and let's get right into it. All right, so same thing's been working that we've been going over, so I'm not going to spend time with that. Last week, for those that paid attention to the video, IMTE, we were monitoring for the unwind type trade. We know it has a history of doing so, so anytime that it runs, it automatically goes on radar. It was a perfect looking left situation. So you look left and you saw that it hit the resistance in the mid 13s, and then it also double topped to, not the penny, but it went 1 penny higher. 1 penny higher. And that's not by chance, right? That is something that you can predict. Is it always going to work? No. But can you go in and assume that it's going to have trouble at that level? Yes. Do you need to be there ahead of time? No, you don't need to be. But you should assume that it's going to have trouble with that level. And if it does and it proves, then you can start to scale in from there. And that's exactly what I did. You can see on my trade on IMTE, the 13s all the way down. Once again, covered it too early, but I got some 7s, 6s, and down to the 4s. Very, very not easy, but easily anticipatable, if that's a word. As far as anticipating that it's just a ticking time clock, right? So at some point, they're gonna pull a bid. And it's just about you not exhausting yourself on the front side and you keeping it on watch with price alerts like we always talk about. And if you did that, then you scored in a big way this past week. RDBX, we talked about last week on the video, thinking that there was going to be a monster squeeze coming, thinking that it had all the writing on the wall for a potential outlier move. And so at that time, I wasn't positioned. I positioned on Monday and Tuesday and Wednesday. I got call options, as you guys saw, and I tweeted out. And by the end of the week, those all went some upwards of, and actually over 1,000%. So that was really, really neat. Basically 50 cents to like $5 per share on some of those, or almost. And that was nuts. So really, really good trade. I did not hold the equity the entire time. I made it till about 12, maybe 13 on a little bit of the equity. And then the options, I took them all off around 13, as you guys saw. So that was nice. PBTS was another one. PBTS was a long idea on last Sunday video. Saw the buyer in the tape, and the daily chart was kind of getting absorbed. Unfortunately, I did not get 35s or 40s or 50s, but I did trade it after it went nuts, and it ended up being a decent opportunity. It still is in play. But hopefully you guys were able to participate at some capacity if you saw that trade set up. But again, this is why we scan. Getting familiar, seeing these things sort of setting up. PBTS was showing its hand. That's why it was on scan. It was showing that there was a trend that was getting soaked up. Now, does that mean I'm going to nail them all? No. But the signs were there that these things are getting accumulated. Does that mean that they're all going to break out? No. But if and when it does go, these are the types of moves that can happen. So this is why I respect the price action. And if it were to go and it went only to 50 cents and it's stuffed and it's got heavy, then obviously you need to adjust along the way. So again, I'm not here trying to say, told you so, 35 cents to $1.60, you could have, banked. I'm not doing that. But I'm just showing you that if you prepare and you monitor what stocks are getting absorbed, then, you're one step ahead. And that's what this is really all about. I put out some goals last week about how I wanted to improve what I was having a little bit of difficulty with, and I did a pretty good job at that. One of the things that was not tiring, but almost exhausting a little bit, but was SIGA, Veru, and VTNR, right? So there was a day that they were just kind of stuck in a channel, and they were breaking out, and they offered a nice, entry, and then a nice cover. But like I said last week, if I was anticipating the breakdown, I didn't make any money. It was, I had a realized gain, and then I ended up losing on the core. And so the point there is that you want to make sure that you don't exhaust yourself anticipating the move, because guess what? The next day, on that Monday, SIGA, Veru, VTNR, the trades came and they unwound. So I was just a day early. But if I was fully exhausted, then I wouldn't even have them on radar on Monday. So triggers hit, price alerts hit. This is why we set price alerts. And they just completely unwound. So it was a really, really nice opportunity. And hopefully you guys were able to take advantage of it. We went over avoiding what you suck at. It's the easiest rule. It really is. If you look at everything that you do, and you know that you are not good at some major type of range, something that's chopping up and down, $2, $3, $5 a share, and it's only $5 a share anyway, right? So if it's going 5 to 7 to 8 to 10 to 12, then that should set off alarm bells. Hey, leave it alone. It's not for you, right? And so that's just what I do. And, I might trade them sometimes, but it's not in size like I used to do. It's just not for me. And I've developed as a trader, and I figure out what I'm good at and what I'm not good at. And I focus on what I'm good at, and I avoid or trade small what I'm not good at, because I'm still good at anticipating potential moves. But in the event that I'm wrong and I'm sized, I don't always make the best decision. And therefore, the way to control that is not to size. Volume always trumps all. You guys know that. I always repeat it. But once again, watch that volume. Watch how it compounds pre-market or out of the open. And those are the days that hey, maybe I should be a little hands off. And let's just see what happens first before I commit to anything. Low floaters, are they worth your time? Kind of hit that already. A couple things. COGT, exhaustion move. So I want to encourage you guys. I had told the Traders Lounge, which is our off-topic room, to record the action. And 850s was basically soaking, and it offered a nice little pullback. But at 830s, I said to everybody, this is a nice pullback if you did participate in the fade, but be cautious because it just walked down on low volume, right? When I get confidence for a breakdown, it's because it's ramped up, failed, ramped up, failed, ramped up, failed. And it stuffs and continually, hits a brick wall. If it just kind of fades off and it's just kind of low volume, in my head, I'm saying, okay, when's the swipe? When's the swipe going to happen? Because they just kind of make people feel like it's going to unwind and then boop, right back to 850, 860, 870. And that's exactly what happened. And it happened, it only took 2 minutes. I think it was 10:40 the swipe happened. At 10:38, I said in the lounge, record this because this is the type of action that you want to be aware of. And then it did it and it trapped, and then it trapped again, and trapped again. So we had one exhaustion move that I pointed out, as you guys saw, I tweeted it, into that 10 move, and then it just completely came apart. Now, I covered too early because I was getting off the desk, but it's a really, really good trade to go back and review and think about, how, if you did have trouble with it, how you could have traded it better, and just being patient, because the higher these things go, the more opportunity you're going to have on the flip side, right? So don't worry about missing the backside. And that's why most people lose, is because they're worried about missing that entry for the backside. But the higher these things go, the more opportunity you have on the backside. And the same thing with Jan. Jan, I tweeted, looking left, right? So Jan was a monster mover. And I think 4 or 5 times in a row, it's peaked out at $5 per share. Does that mean that it's going to peak at $5 per share 100%? No. But is there a good chance that it does? Yes. Do you want to let it test without being too sized? Yes. But after it confirms, then you've got a proper risk to reward based off that 5. You know there's a huge seller there over the last 4 or 5 times it's tested, and then unwind. And that's exactly what happened. So once again, COGT and Jan. Most times, in my opinion, how you take these things, how you process them. Most people are, oh yeah, hindsight, told you so, blah, blah, blah. But that's not what me going over these is about. It's about how can you improve as a trader? What could you have seen better? And giving you guys the information that can make you be more selective or better entries. And going back to, yes, in hindsight, this was a great trade, but what made it a great trade? What could you have seen that would have made a better entry for yourself? Or what could you have done better? Could you have waited? Could you have done this? Could you have done that? And so that's why I'm giving you these really, really solid setups so that you can go back and review and see just even how I traded them or if I missed them. But don't take it as I told you so, you shoulda, coulda, woulda in hindsight, because all this stuff is happening real time in the room. But I want you guys to be able to see it in a real time environment and be able to react accordingly based on what's going on. And that's it. That's all I've got for the checklist of things that I want to go over each week, and in particular this week. And let's get right into scan for Sunday. All right, guys, so for the second part of scan, as always, I'm not a financial advisor. These are not buy or sell recommendations. This is for educational and informational purposes only. So my goal is to kind of get you in the mode of what I look for, what would make me take a trade, so that you can anticipate it on your own and come to the market better prepared. COGT. Will definitely be a watcher. I would love to see this thing gap up. I would love to see some sort of push back up towards VWAP. It's unlikely, but I would love to see something like this where it busts through 811s, 810 basically, and ramps up to 850, 860. Exhaustion move, and then fade back off. There's a good chance that they unloaded a ton of warrants over the 9 level. There's a very good chance of that. So it might be even thicker than it was on Friday, but there's a lot of unknowns. There's a lot of folks that are trading this thing that are trying to find the top, and they ignore these couple situations where we've got this basically trap formation, right? So they're just kind of, going sideways, accumulating everything, swipe it up, sideways, accumulate everything. And then we had the same thing happen a little bit later on, actually right here and right over here, where it just goes sideways. Is there an edge for you to anticipate it to flush if it's like this? No. There's an edge after it cracks and it comes back up and fails, cracks, fails a little lower, cracks, fails a little lower. There's an edge, but is there an edge thinking, hey, it's going like this sideways. It's either going to go up or down. That's 50-50. So wait for it to tell you. Because a lot of times it might break out one candle and slam back down. But my thought process was whatever it was going to do was going to come back to VWAP. And so I didn't want to get in there too early. I didn't want to size in too early. I nibbled here and there, but there was no size at all until exhaustion move. And I went over that live in the room so that you could see how it happened. And that's why I want you guys to record these particular names. It doesn't matter if you trade them, but you can go back and see how things go from extremely thin and jumpy to the upside to every single time it tried to reverse, it just slammed back down. And you could see that on the backside. So if you look at the front side, you can see every time it consolidated, it ripped up real fast. Then if you look at the backside, you can see every time that it consolidated, it slammed down, consolidate, slam down, consolidate, slam down, right? So that's what I look for. And that's the difference between the front side and the back side of a move. RDBX, this thing, I mean, no position right now. I did have calls. I sold all those. I did have equity. I sold all that. And then I also bought some 17 calls and 18 calls just in case for a dime, which obviously went worthless. But it was worth it just in case it went, bananas. If it started to go into a circuit halt, it went 20, 25, 30, those things would have paid out like crazy. Was there a chance? Yes. Was it worth the risk? Yes. Did they expire worthless? Yes. That was the risk known. But I plugged in like 1% of what I made just in case. Because that 1% of what I made could have ended up doubling, what I made overall on the swing. So, everybody's going to be looking for this thing for a short. If it flushes out and it holds, just remember, shorts are bent. So there's a good chance that dips will continue to get absorbed until we have that exchange. And a lot of people are focused on these warrants and, RDBXW, which went nuts as well. And I think it was 1106. I'm not positive. Let me just double check here. Let's see. $11.50. So they've got all these warrants at $11.50, and I think that a lot of people are thinking like, okay, well, it's over $11.50. They're going to hammer down. But I don't know this, and I would fact check it, but it's possible based on the CSSE share exchange, merger, whatever they're doing together. It's possible that they can't even exercise those. I don't know for sure, but it's possible that people put a lot of confidence that 1150 was going to be the top, and now they're in a really, really bad spot. And if that is the case, then we could have still that outlier move. So I'd be cautious long side. I'd be cautious short side. But there's going to be a trade here. There's going to be a nice opportunity. Don't try to find the top because that's when you get in trouble. Blue, for whatever reason, did not. Oh, I guess it did. Blue went nuts after hours. When I was pulling it up on my other computer, it didn't have the after hours session. But good opportunity. Should have a nice big move. But I'm not in a rush. We got to figure it out. I don't have an opinion, one way or the other right now. But we're going to just have to kind of see how it opens and then make that plan. And that kind of happens pre-market in a situation like this. OXY, every day it's been fantastic. It's been a nice unwinder the last couple days. We're back at daily support here. So there's a chance that we flush down all the way down, maybe even to the low 60, like 61s, and then rally back up to 65, something like that. But it's been a great daily trader. I did not participate on Friday much, just small. But the last couple days, it's been a really, really nice trade, which also I've sized in and minimized, unfortunately. But it's still been good. AMC, same deal, higher the better, 9:45, 10 a.m. plus trend join. Really, really nice opportunities. Next section is failed follow through. Higher the better. These things, be aware if they reverse, such as NVAX, it's come straight down. This is one of those kind of retail headline sell-offs that we talk about. I fumbled that one too. I was there. I had a plan to short 60 to 62 in size and anticipate the full day unwind. It worked perfect, but it started to pull back pre-market faster than I had planned or thought. So I was only able to participate into the opening push, came back, but draw a line, and you can see how looking left will help you identify different levels where prior support becomes resistance, and it makes for a much cleaner trade. It doesn't mean that you need to short at those levels, but I think the biggest takeaway, when you draw those levels, you don't want to be emotionally attached to that level. So if you're short, you don't want to be stopping out there. You need to have a little bit of a buffer. If you don't have a buffer, you're going to be covering into the top of the channel. Then you're going to look back and say, oh, I should have waited. I should have given it a little bit more room. So NVAX and mRNA, I'm thinking that they will continue to unwind. That said, if it starts to find a bid and we bounce on the market and things like that change, obviously it's market permitting. So I don't want you to think that I'm short biased and then it goes up $10 and I still think it's a short. Right now, I'm interested as long as it continues to find resistance every time it tries to bounce. Last couple on failed follow through. BIMI, higher the better. I traded it into the parabolic pre-market. Very nice trade. Covered a little bit over here, and then I cover the rest at the close. Ideally, it pushes up, and I think it's pretty clear that this area 73 to 75 range would be an ideal sort of exhaustion area. So hopefully it gaps up, goes into that area, and then gives that opportunity to fade off. IMTE, nice one on Friday, gave a great opportunity. Exhaustion move, came back in. I shorted into the power move when I had mentioned I did, and then I covered over here when it started to consolidate. So that was that. Alt was one that I had started into and never really scaled into it. And then over here, it was actually, I had a bid at 775 to cover and just be done with it. Then it rallied back into the close. So that one, it didn't turn into anything, but I just didn't really have a scale situation because I had left the desk and, unfortunately it rallied back up instead of staying heavy. So I'm still monitoring that, but I would ideally love to see 9+, but right now I'd be looking at this 870, 880 range as sort of an exhaustion spot. But ideally we get into the 9s and start to break out and do something crazy and then give a good opportunity. But this is one of those where you don't need to find the top. Once it turns, it's going to be a nice unwinder. So for example, NGRV we talked about last week, or NRGV. We talked about this on Sunday video, and the next day, I got short, and it was a nice unwinder. But once again, completely unwinds, right? So in my opinion, alt would be similar, where you don't need to find the top, and maybe you try to find the top this day, then this day, then this day, and you're like, all right, I'm done. I'm exhausted, right? And then it comes, and you miss it because you got exhausted the last 3 days. So be cautious not to make your next 3 days these 3 days where you size in, size out, size in, size out, and get exhausted and totally miss the move. You don't want to be doing that. Last one is Docu. Docu was monster. That was my trade of the day on Friday. I started in a little bit over here. Confirmation levels for me was 67, 80s, and 66, I believe. Scaled into that trade. You guys saw the trade. Covered into the flush. Traded it on the CNBC push again, covered into the flush a little bit early. But higher the better. You can see that it's got a little bit of a, kind of consolidation pattern over here in this range. So basically 65 50s to 66 50s, 70s, around that range. So the point of drawing this is just be cautious sizing in this range because it's still 50-50 until you break under one way or the other. And sometimes you get chopped up if you've got too much size. Other than that, continuation side, IMPP. This was another nice idea. On Monday, I got long. I figured it reminded me a lot of SNDL. If you guys remember the SNDL breakout, just a really, really, really thick, diluted pig, and it just kind of defied all odds and kept on, kind of going. So I feel like that's what's happening right now with IMPP, but there's certain things that need to continue to go. HUSA and USO and all these different oil and gas type names. But the volume's there, the trend's there. You can see here that the low was 76, the low was 77. So they are holding a higher low on the daily. So dips I'm interested in as long as it doesn't break and start to, trend downward. But I took the trade. I did not expect it to work out that well, that fast. The first day that I had bought it on the flush out of the open, and it continued to go on and on and on and on. And it's had some really weird straight up moves, which kind of symbolize like a buyer, a real buyer. So the times that it moves like this, they're probably taking real size off the market. And if that's the case, then we will get that outlier style move. So I don't want to get, aggressively bullish on the long side, but if it does continue to prove my thesis correct, which, started in the 50s, 60s, then I will continue to trade it accordingly. It does get harder each time you exit the position because then your average becomes higher and you get maybe a little bit more emotionally attached. So just make sure that your game plan and your risk is in check if you are trading it. Last couple, BLTE, I'm just monitoring, nothing that I want to get long on, and same thing with top, just monitoring. I have them on continuation section because I just want them to keep on going. But I'm going to be watching in case any volume comes in, and just be prepared in the event that there's some sort of big exchange and it looks like it's going to turn around and go down. CYRN, notable action there. We've got a liquidity trap potential situation. We had 57 million shares. We had 3 million. We had 2 million. And it's back towards the highs. So watch dips. And if it holds trend versus these like 230s or so, then we have a potential liquidity trap playing out. Be aware, if it gaps up, such as YMTX, we had a liquidity trap sort of there. The next day, this thing started to rip, and it double topped, same price. So remember, liquidity traps you're taking advantage of the squeeze that's coming in, the cover. So if it goes and it rejects at the prior top, then you know that there was probably an exchange there. All the shorts came in and covered, and then the bid's going to go out. So you don't want to force a thesis, and that's, I want to remind you guys of that, such as this CYRN. If it were to rip and it goes into 265s and there's huge amount of volume that goes off and starts to get heavy, you don't want to overstay on that, because that means that the cover already came in. So the idea behind a liquidity trap is that shorts haven't covered yet. And if they're walking it up slowly and slowly and slowly, then there's that potential for the breakout. But if it does hit and the volume hits, then obviously your trade thesis is void. Last couple that HNRG was a big picture idea this week, just kind of joining that trend. AUST I've been monitoring. This thing has a pretty nice potential, given what's happened with AERC and all that kind of stuff. But this is another one of those dumper type trades. So I'd be cautious of it. But if it does start to base over 2, you got potential there. And then last but not least, MOBQ. Interesting save here. Nothing I'm crazy excited about, but definitely interesting that it ramped up, came back in, opened weak, closed at the highs. So to me, that's like, all right, I need to watch this if it continues to get soaked up, because this is that sort of move that you see when sometimes trends change. So that is what I'm prepared for. Main watch is the same, just a couple. Typically, I take 2 main watches from Scan and 2 main watches from whatever's happening pre-market, and then develop my plan. Most of my trades have been 9:45, 10 a.m. plus or beyond. I've taken some trades pre-market and then done with those. And I'm very cautious right now between 9:30 and 9:45, especially because, that's when you start to develop a bias that can hurt you the rest of the day. So if you start to get on the right side of a trade and it's working, you scale in, and then it has that candle the other way, then it's up to your risk. And if you don't take it off at the right time, then, sometimes you get a little screwed. So that's it. that's what I'm looking for the week ahead. I hope you guys have a good rest of the weekend, and we'll catch you in the room tomorrow.